It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, welcome back to another episode on your long Easter weekend break as we talk property. Yes, of course, only property. What else would we be talking about? With over 1,000 episodes, yes, for you to surf through perhaps this weekend, catch up on some of the latest episodes that you might have missed out on. It is a Sunday. It is April the 20th already. Hope the kids aren't too buzzed up on chocolate. We kind of forget just how dangerous sugar is for young children's brains as they develop. But then again, is there anything from a parent's point of view that isn't dangerous these days? I say that like I would know, but a little known fact, I don't have children of my own. My sisters do, but I am childless. And last Monday, we had a great conversation about property with Graham Cook from Finder that is coming up in just a moment with our week that was. We were also in Melbourne talking to Madeline Roberts there and throwing up the question, are falling interest rates in Melbourne about to supercharge the property market? And also last week we featured just 5 years ago, Victoria Pinterett. She was working at Bunnings while studying interior design and construction. Then she faced job losses. She lost 100 grand in a failed subdivision. Can you imagine? She then had to move back into a rental. But through 10 home renovations, this is the silver lining, she showed an unshakable grit and turned it all around. So that is coming up, all part of our Easter Sunday. That is on its way next. Have yourself a great day.
Grab your weekly dose of inspiration to help build a real estate portfolio. We talk to the best in the business every day. Learn from the professionals and know your property with us.
And even with potential interest rate cuts this year and next year, the reality for home buyers is pretty grim.
It is, yeah. So these numbers here are based on average incomes and looking at spending the right amount of money on a mortgage that you look to be spending about a third of your income on paying back your mortgage. And if you were to do that, what would you need to earn to be able to afford to pay back a mortgage? And we're looking at what you need to pay in January 2025, and then using forecasting figures to predict what the price will be in 2 years at the end of December 2026. Now, the figures we used to predict price increases were from KPMG, and they're relatively modest. So the Sydney growth figure for houses, for example, was 3.3% for the first year, 7.8 over the 2 years. And that's where we got these figures. So based on these figures, in 2 years, you will need to earn 15 grand more to buy a house in Sydney, 8 grand more to buy a unit. We have those figures across all the capital cities, and they're fairly lower. So those are the figures. They're pretty big. But what's kind of important to highlight here, I think, is these are based on these original KPMG forecasts. What's happening in the global economy now with the tariffs and all the kind of economic uncertainty means, according to our panel of economists at Finder, that we might be seeing more rate cuts than expected this year. So we've seen one RBA cash rate cut already. We were initially expecting about 2 from our panel of economists. Now they're kind of saying maybe 3, maybe even 4, maybe more cash rate cuts over the course of the year. And of course, if we get cash rate cuts, that makes borrowing cheaper. And that usually means it'll push house prices up even further. So the recent economic turmoil we've seen could make these salary increases that you will be required to earn even bigger than these figures.
We talk about these global shocks. Normally with a global shock, it's heading in the opposite direction. So it just means that the prices are going up and it's more harder to get into the property market as the interest rates might kick in because the economy gets out of control. But saving a deposit still remains one of the greatest barriers to home ownership, especially in a market where house prices continue to rise. As these values go up, so does the amount needed for the upfront deposit, and then you've got stamp duty, and that means that buyers must not only earn more to qualify for loans, but also they've got to save faster, and they can't really keep up with what's happening.
Yeah, exactly. I mean, if you look at house prices going up about 7% a year, if you average the last number of years out, wage increase is about half of that, about 3.5. So house prices are accelerating about twice as fast as wages are growing, which means it gets increasingly more difficult to save a deposit, an increasingly higher amount of stamp duty required, and then an increasingly higher amount required to actually fund the debt on a home. So unaffordability is probably going to continue to get worse, unfortunately, in Australia because of those two factors, and also because of a factor kind of unique to the Australian market, which encourages people to invest in property, which is negative gearing. Means that, if you earn a lot of money, you pay a lot of tax, you're incentivized to purchase an investment property and offset your rental losses against your tax. People do that. That pushes house prices up even further. So it is a situation where if you're trying to get onto the bottom rung of the housing ladder in Australia, that bottom rung keeps getting higher and higher.
The big thing that most people are talking about, if you've got it, is the equity in your home, because in today's market, the only real way that many families are managing to upgrade is by leveraging that equity in their homes that is already baked in. And with property values steadily rising, homeowners are also able to renovate. I mean, this is a big space, the whole renovation, sell for a profit, move up the ladder, repeat, buy a renovated property, sell, repeat, and over they go. It's a good way to build equity.
Yeah, and you can increase the value in your home if you do that too. We're also seeing quite a lot of Finder members looking at doing things like rent vesting in the current market. So if you live, say, in a city, but you can't afford to buy a home there, instead you purchase a home in somewhere that's more affordable and you continue to rent while you're renting, but get the income from the home separately. So that's something we're seeing kind of more of in the market now. People trying to find where in Australia they can find a little pocket of property that is within their kind of affordability range.
We are your local source for unbiased, expert insights into the world of real estate. We are not a real estate company. Our only objective is to help you better understand the real estate market.
As I say, people breaking free from mortgage prison because of that sentiment going up a little bit. It's probably something you've noticed in your neck of the woods.
Thank you, Craig. It certainly is. So even in anticipation of that first rate cut, we saw consumer confidence returning. We saw so many people who were otherwise waiting on the sidelines starting to return. And obviously, since that cut has taken place, since then, it's really been going crazy on the ground in the Melbourne market, particularly in those lower price points. So it's been very interesting to see.
Yes, the question is, are the falling rates about to supercharge or even turbocharge the property market? It's always the same. There's either not enough or too much. It's feast or famine. So these interest rates, they're likely, of course, to be more as we progress through 2025. The Australians are at the moment upgrading, they're refinancing, or they're buying that second property. So what do you think? Do you think that it's going to super turbocharge the property with these rate cuts?
I certainly do. I love how you said feast or famine, because I think it's definitely time to feast. People are just coming out in droves. Like, open for inspections currently, we're seeing 40 to 50 groups through, and properties are selling above the range. So buyers are definitely out in force. And if we see more rate cuts, there's only going to be more lending and more money and more people out in full force. So I think it's going to be a very interesting 12 to 24 months in real estate if we see those further cuts.
Yeah, and then on top of that, we've got the Trump craziness around the trade wars, and whether that is actually going to help the Aussie mortgage holders. Now, there's a school of thought that the more crazy that it gets with these trade wars, that potentially the rate cuts could come down. I think there's also the potential that it could go the other way. I don't think it's an absolute given, because if it starts to affect the economy, who knows? But have you got a school of thought on that?
Yeah, so it is interesting. I suppose, like anything, if it's unknown territory, it's unknown what's going to happen. They have been talking about a double cut for the month of May, which would just be phenomenal, obviously. But yeah, I suppose whenever there's uncertainty in the worldwide economy, think back to COVID times, I guess there is that level of it could go either way. But for the most part, what we're hearing in the media, I think it's sounding pretty promising for purchases right now, and with rate cuts and things like that.
So with that first rate cut, being a buyer's agent there in Melbourne, that 25 basis points, when that was slashed, what did you see weeks afterwards? Like, we've heard from others saying it was just so positive as a result of sort of turning the bend. Is that fair to say?
100%. So what we're seeing at the moment on the ground is prices appearing to be back now at where they were in 2021 during the COVID peak. So Melbourne's had quite a slump over the past few years. We've kind of leveled out now and we're definitely seeing that increase. As soon as we had that rate cut, purchases were really coming out in droves. It's been great to see and it's great overall for the Melbourne market. I think we've been well overdue.
Don't navigate the real estate market alone. Let us help guide you in the world of real estate every day. Make better informed decisions with the latest news and insights.
Yeah, so we renovated our first house and then we had money from that, but we were really struggling to buy another house again because the market was booming so much. So we thought, we'll invest this into this person's subdivision deal. And it was an amazing deal. It was a 1:5 and the numbers were just stunning and beautiful. But unfortunately, the developer wasn't very good at project managing and ended up going into bankruptcy. So we lost $100,000.
Now, for our first home buyers, what would you tell them not to do in your situation?
I would probably just not hand my money away again. I would buy something myself and look after the money myself.
So take us a little bit back to 2021. You were, as I understand it, you were priced out of Brisbane. Then I think you made a move to Victoria. No, did you move to Victoria? Am I getting that right?
So in 2021, while this money was invested, we were working again, saving up, and then we still couldn't find anywhere in Brisbane within our price point. We looked at buying in Ipswich. I had a boss at that stage who back in the day bought houses in Byron Bay and West End for only $100,000. And he said, have you looked at Ipswich? And I drove out there the next day because I knew that this man knew what he was talking about.
Yeah, and so then you're having a look around Ipswich and you're going, maybe we can do a couple of property flips. Is that what happened?
Yeah, so at that point in time, I was doing feasibilities and all the deals were stacking up and it looked like there would be tiny profits. It was all we could afford at the time. So we took the risk and bought our first deal out there and made almost 4 times as much profit as we thought we would from our feasibility.
Okay, so what happens next after that?
We were doing the flips ourselves, making good money. Sometimes you do it and you put in so much hard work and you barely make any money as well because, costs can blow out. It might sell for less than you expect. We did quite a few and then we had some friends that wanted to do a flip, but they didn't have the time. So we did a joint venture with them. They bought the house and then we renovated it and then we split the profits with them.
And then after that, as I understand it, you were flown into Melbourne to help with a new build. What was that?
Yeah, so after we did the joint venture with our friends, I saw a post on a Facebook group from someone who lived in Melbourne saying that they had a house they needed to renovate where I lived. So I reached out to them and I said, hey, if I run your renovation project, I think we can make you way more than you think. And we renovated the house for them. We made them way more money than they thought. So we split every dollar over the top price they thought they could achieve. And they were so happy that they flew me down to Melbourne for the day to pick finishes for their new build, which they were trying to maximize the value of because that was a development. And it was so much fun.
Now let's go from all of that into you deciding to go into the hospitality business with your partner, Roger. You reinvested some of these renovation profits, etc., into a boutique wine bar in Ipswich. You're a busy person, Victoria.
Yeah, so after moving out here, we realised there was nowhere to go. So we came across a lease for a beautiful heritage building. It's all exposed brick beams and a beautiful laneway. And we couldn't not take up the opportunity. So now we own a wine bar. And that's probably been the most challenging project of them all. It makes renovating look easy.
So what were some of the real challenges for getting this wine bar up? Because obviously a full fit out and renovation by yourself and your partner.
So the fit out and reno was the easy part because that's what we're good at. But it was curating all the menus, finding the team, the marketing, the branding, and just the day-to-day operations of having a big team to manage for the first time in my life.
Well, it's been quite a property journey for you. You know, it might have been very difficult 5 years ago when you were thinking, gee, how on earth are we going to get into the property market? But there's a steely determination, no doubt about that, particularly losing $100,000 on a failed development. A lot of people might just sort of pack up their kit after that and sort of play it a little bit more safer and say, well, I've learned a lesson there. I'm not so interested in going out on my own. But you persevered, and well done for that.
Thank you. It was my passion for design and heritage homes that really drove me through this. Seeing all the Queenslanders out in Ipswich, I just really wanted to work on them and restore them and bring them back to life again. And that probably was the main driver for all of this. It wasn't money, it was just the love for heritage homes and interior design.
We connect you to the best real estate information across Australia. The Real Estate Podcast.